So we were now looking at institutional investors. Apologies, that was my younger brother. Please ignore him. So institutional investors are companies or organizations which pour money. Pour money just means bring together a set of money. And what they do is they do this so they can buy securities, real estate, and other financial assets. Now, you're probably wondering what securities means, because real estate makes sense, right? And financial assets too, like stakes and shares. But what is securities? Securities are tradable financial instruments which raise capital in public and private markets. Now, that probably sounds a little bit confusing, but we will look at securities in further detail soon, so don't worry. But the general gist is that they are companies or organizations rather than individual people. Okay? Now, examples of institutional investors are pension funds, endowments. Apologies if I've said that wrong. These will also be looked at in further detail soon. The bank and insurance companies. So these are examples. And these are institutions which make a large number of big investments in the financial markets. These are sort of the big guys, the elephants of the market, or the big people. And an institutional investor is not someone who is who primarily makes a benefit of any investment. So with retail investors, we made a benefit. It was very personal. An institutional investor is basically just a business which acts as a vehicle through which others may channel their investments. So, like the bank is basically a business, and people channel their investments through the bank. They, deposit £10 in and they make an investment. So it basically allows other people to channel their investments. So they're pretty big, and they account for 3/4 of the volume of trades on the New York Stock Exchange. So that's just to give an idea about how much of an influence these people have. They are considered sophisticated investors who are knowledgeable and less likely to make uneducated investments, which is why they're subject to fewer of the protective regulations that these Securities and Exchange Commissions provide to your average everyday investor. This is again something, if you want to research, go for it. But basically, they're more free to do whatever they want to do, whatever they wish to invest, because they have more trust. It's like if you go out and ask for a loan. Depending on your credit history, depending on how good you are with your money, you get a larger loan and you're trusted with it more than someone who perhaps has a poor credit history. Same with investors. The more sophisticated you are, if you're an institutional investor, you're more trusted with investments. So the money that they use is not actually the money they own. They invest for other people. So you would put your money through an institutional investor and they would help that money grow for you, right? And they can negotiate better fees on their investment. They have the ability to gain access to the investments that normal everyday people do not, such as investment opportunities with large minimum buy-ins. To gain access. Sorry. So gain access to the investments that normal everyday. So investment opportunities with large minimum buy-ins. That's something to look into. My apologies. I should have looked into that. I will cover that in the next video when I make it. What that even means. Sorry. And this is examples of institutional investors. So you've got insurance companies, banks, mutual funds, private equity funds. What's equity? What's endowments? What's funds? You probably might be wondering. They will all be covered sooner or later. And these are just the websites I used to gather this information. I think I should credit them. Please go search on these websites if there's anything in this video that wasn't quite covered. I also want to let you know that in the next video we'll be looking at investing as a beginner, how if you want to invest or I want to invest, what we should do, what we should look out for, what markets we should invest in. And I think from then on we can start slowly moving up the ladder and looking at the institutional investors, what it means by large minimum buy-ins, what endowments are, what funds are, what equities are. But in the next video, I aim to cover investing on a smaller scale, beginner's investment. This was just generally covering what investment is, So I hope you've enjoyed this little series, and I will see you soon. Have a great day. Bye.